Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor. I ran across this Andy Schectman clip today and I couldn't remember if I had shown this to you before. I want you to watch it now.
Something that will happen, and I think it's something that is unavoidable. You're right. They're all building their own central bank digital currencies. In fact, if you take all of the countries that comprise 95% of the gross domestic product in the world, they all have CBDCs that are in development. And so every single country is going to have their own CBDC. You have China, the United Arab Emirates, and one other country that last year developed the Project M Bridge. M is in money, that allows these currencies to trade amongst one another. But indeed, at some point, I do believe that they will issue a common settlement currency with the BRICS, and it will be backed by something. Look, let's go back to what we talked about last time. Why would the Bank of International Settlements have reclassified gold as a tier 1 asset if it wasn't going to be significant and used in some form of stability backing the system? Why, after almost 80 years, would they have chosen gold? And why have all the central banks repatriated the gold? And why are the central banks buying more gold over the last 18 months than at any time in history? And of course, the countries that represent the RICS in BRICS, Russia and India and China and South Africa, and you can throw in Saudi Arabia, they all have been voraciously accumulating gold for the last few years. And so, look, I think it's inevitable. It will happen regardless of the pushback, regardless of the rhetoric. I think there's something to be said for not being completely transparent with the rest of the world until all of the pieces are put in place. But you don't have to be particularly astute to see the crumbs that are being laid at our feet. And so, yeah, look, Michelle, I think that you're right. There will be individual currencies, but I think they're also going to trade with one another on a platform that sidesteps the SWIFT system, sidesteps the ability of the West to sanction them. But when they really want to accentuate their position, they will issue a common settlement currency in the BRICS. Now, when we talk about settlement currency, like? James Rickards believes that they're going to issue or challenge with a reserve currency at some point, and to do so by issuing a bond market that would trade amongst 20 plus, 30 plus countries in a gold or commodity backed currency. Now that's down the road.
Yeah.
But
let me read to you what Arthur Brito said. This is from January 4th, 2013. I believe Ripple will eventually support bonds and bond markets.
But that's something that I think would very easily be accomplished as step 2 once the BRICS currency comes into place. So I get whether or not it's issued in August to me is irrelevant. And, they've been pretty open about the fact that this is something that they've been thinking about for a very long time now. And
all right. And Miles Franklin's one of my sponsors. This is where I buy my physical gold. The code's DAI Gold. You can email them at info@milesfranklin.com or call them at 952-929-7006. All that's in the description of this video. Now check this out. I don't know who this guy is. Doesn't say who he is. Listen to this.
I think USDC is obviously incredibly important for the crypto industry, right? I mean, it is, in my sense, pretty much the killer app of sort of retail crypto, because it does solve the key problem of moving money and moving money quickly and cheaply. I think this sort of thesis still needs to be played out, but I think where USDC is going to hit a cap is going to be at scale. So when I talk about the $10 trillion that we're processing every night, So when I talk about the $10 trillion that we're processing every night, and I was looking this morning, I think the market, the 24-hour volume for both USDC and USDT is like $25 billion or something. That's like 400 times less than what we do every day. And if you think about having to fully reserve $10 trillion to be able to make those payments every day, that's a lot of liquidity that you're taking out of the system.
This problem, and I think we're really close. I mean, USDC itself we've seen over $3.5 trillion of transactions directly on the internet between counterparties. And so if we can, improve it with more scalable blockchain technologies, like, Brad's company provides more scalable blockchain technologies, like, Brad's company provides.
So I think that USDC has, 100% a place to play. I don't know that in its current construct, it can play at the institutional level.
Clients don't want, individual bank tokens. They want multi-token, multi-border liquidity for added efficiencies.
And there is a lot of money that is being put in terms of trying to solve these technical issues of interoperability. Now, the second one is more complicated. It has to do with liquidity. So imagine that you have a pair of currencies for which there is not a complementary demand. You need to go and search for a third-party currency in order to make this settlement actually happens. And this really complicates things. So we need to put pieces of technology that can make more efficiency this use of liquidity so that more transactions can be settled.
We started building RippleNet with the thesis that crypto liquidity would eventually be able to support robust global payments, large payments.
I don't know what that music is in the background there. Don't know what that is either, but anyway, part of that was a good video. New per Bloomberg, the CFTC has voted to sue Voyager co-founder Stephen Ehrlich for violating derivatives regulations by allegedly misleading customers about the safety of their assets. You can see CNBC having a lot of fun trying to make sure they blow up the FTX thing to make crypto, everything look shady, when it was just one shady guy and company that all the regulators were working with, by the way.
Yeah, crypto was this is going to be an unregulated paradise of, non-governmental money, right? I mean, that was the appeal for a lot of people.
Right. Like, crypto is unregulated, but the thing is, the way it works is for exchanges, the exchanges that have crypto need to be regulated. That's a different case. So we need major regulation in this space in order to make sure that we have more and more institutional investors coming into it and actually growing the business. Crypto itself is a deregulated, decentralized system, but it's our only avenue to actually make a quantitative money as far as that's authentic. So we need to have more and more regulation. I just never expect.
They made sure his face was plastered everywhere, almost like it was a marketing campaign to make his face the like a poster child for this thing. More on that in the private group. XRP, let's take a step back even more. Now, I wanted to show this because I am not a chart guy. I tell you that all the time. But let me show you. I just want to show you what I am. I do study history. And I was there throughout this whole history. And I can tell you that this right here is what happened to XRP in 2018 when there had been no shenanigans in play. This right here is what happened when everybody in their gut knew what XRP represented. From here to here has been when every method known to man has been used to suppress what everybody knew in their gut, okay? Which is why I believe that from here, this way, is going to blow people's minds, okay? Once we're officially past everything that has been everything that has been tried to stop this, because I don't think there's any stopping this train. Look, Ethereum whales are selling like there's no tomorrow. Bitcoin whales keep hodling. I'd be selling if I was an Ethereum whale too. I was just noodling around XRP Scan, a wonderful site, and noticed a wallet activated today, October 11th, 2023, with an inbound transaction of double checks, 410 million XRP. That's a chunk of change. Then we got this from Crypto Darren at Fame21 More. Follow him. Check this out.
And import it from elsewhere to run more deficits to supply the dollars. That's what we do. So if we're actually bringing stuff back, relocalizing, that means the global system is changing. That means the global monetary system is changing. And if that is going to continue to happen, you have to have a neutral reserve asset. You can't have both treasuries be the primary global reserve asset, which means treasuries remain the biggest exporter of the United States, and reshore. If you want to reshore, you have to move to a neutral reserve asset. This is understood at certain levels in Washington. And that's why I say, to the extent it is in the interest of the U.S. defense industrial base that has been hollowed out and to relocalizing supply chains, there are interests that understand that a higher price of gold is not necessarily against U.S. interests the way it was for a long time.
What a profound observation.
Ooh, higher price of gold. Let's finish here, because my question as I look at this, who in the world, this was the poster boy for FTX, who in the world would put this guy up as the guy to listen to now?
This hasn't been announced yet, but in Abu Dhabi, they're planning the launch of a new exchange to replace both FTX and Binance, and they're going to get billions on it, called M2. Totally compliant, backed by billions of dollars, incredibly stable, ownership transparency, and it can be used by anybody in the world legitimately on a compliant basis. Where do you think all this innovation is going to go? It's going to go to the UAE. It's going to go to Abu Dhabi. It's going to become the new standard in exchanges, because you can't hold Bitcoin without an exchange for liquidity. And Gensler has sued Coinbase, the largest in the U.S., which is why Fidelity and BlackRock, who were there on the Hill, were really unhappy because they can't do their ETF. Well, Abu Dhabi's putting up its hand and saying, we can do it over here. If you can't get it done there, we'll do it here. We are the new capital of capital, and we're coming to compete. Everybody should wake up and say, wait a second, this is America. What's happening to us? And they were frying Gensler, frying him, saying, you're stopping innovation. You've got to let this asset class, which everybody wants, you got to set it free. And he just kept saying no. That's fascinating.
Now, this is where I leave you, YouTube. You can go to daixrp.com if you want to see what we're about to show. What we're about to do is I'm going to show you some things I found in Gary Gensler's calendar. I'm going to talk about Joy Ito and some of my theories on MIT Media Lab and all that stuff, and Gary Gensler and how he ties into it. We're even going to go into talking about that country over there that starts with a C. Let me show you. Oh, look at that. We're going to talk about that. We're going to talk about that. So away we go. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family. This is some more shady stuff here. Thanks for listening.